Good morning, everyone. Welcome to our live daily market outlook. Today is Tuesday, 21st of August 2012. A nice and sunny day in our base here in Cyprus, as always. Nice and sunny, and keeping us in a good mood. Sun is always good, gives us some more energy and having a better mood rather than gray and cloudy weather. Also sunny weather in the markets. I would say still summer is fully on, as most of the instruments are still in their quiet summer movements, and basically as most of the top politicians and the decision makers are still enjoying their holidays. I would say until September we are not going to see much of the stronger action. However, the dark clouds over the European Union still stay above and still putting a lot of pressure, as yet no serious action seen from the European Central Bank and the European Union itself in order to tackle the crisis in a more serious way. Yesterday's comments from Germany's Der Spiegel that ECB might put a threshold on the bond buying made a bit of action in the market, though the ECB came with the comments later on that this is not the accurate information, and this was just a sort of a draft idea still to be discussed. The euro was pushed lower, but again it regained some ground with the pardon morning action seen this morning becoming as a regular way that single currency starts gaining at the beginning of European session. Still upper boundaries of our short-term range at 123.80, 124 are intact, and basically break above these levels is required to pull the pair out of its short-term range and show some more action, while sterling is also pardon, attempting at the upper levels, briefly above 200 days moving average, but still short of last week's peak at 157.43, and more significant medium-term range tops at 157.66, 76, with rather weak and the overbought conditions seen on hourly chart, seeing possibility of possible failure at these levels. More of this, of course, we will have in our technical part. Dollar yen is still in the corrective mode of its recent 79.65 peak. Our initial 79.30-40 support has been dented. The pair is currently attempting to base here. However, further easing not ruled out down towards 79, where we expect the reversal. Ideally, reversals should be expected at this point, with the dollar Swiss attacking important support and the range floor and base at 97.00. Overall, dollar is weaker during the Asian session at the beginning of European session. Commodities are being well supported in past couple of sessions, with the crude oil again at its upside. The levels testing a previous high at 96.81. We're talking about October contract being well supported by news that we already mentioned, the tensions in basically war in Syria and tensions between Iran and the United States, as well as disruption in the North Sea oil production, are keeping the oil prices well supported for now, with the U.S. sweet crude oil currently at 96.65, while Brent is steady around $114 per barrel. Gold is also attempting at the upper boundaries, our initial barrier, 16, 20, 30 zone, with the rather positive tone seen on the lower time frames, keeping a near-term focus at the upside. From today's calendar again, not much to be seen. Better than yesterday, of course. Some releases seen from the overnight session, with the key release today from UK public sector and net borrowing expected at minus 2.8 billion sterling compared to 12.1 billion British pounds on release in June, and industrial order expectations for August -7, slightly more negative from the July's release at -6. And the only one from the Americas, Canadian wholesale sales for a month of June due at 1230 at 0.4% lower than the previous release at 0.9%. The Japanese trade balance comes at 2350 GMT. That will be according to our time already in the new day, minus 0.46 trillion yen is seen widening the gap from minus 0.30 trillion yen on release from month of June. And that was the brief outlook of today's events, and we're going to move now to our technical part, as most of you is waiting to see what are the expectations for today's trading action, starting again with euro, single currency, attacking the upside levels, upper boundaries of the short-term range between 122.50 and 123.80, following yesterday's pullback that found ground just below 123 levels. This also happened last Friday. 122.88 was actually our trigger mentioned in our yesterday's comments, with the 123.94 seen yesterday, where the dip from 123.67 yesterday's high was contained, and fresh strength again underway, but still, as shown on the 4-hour chart, range trading is still well in play, and not much promising according to the 4-hour technicals. Still the sideways movements are favored unless we see the break above 123.80 and 124. That will open our next target and basically key short-term barrier at 124.40, double top of 6th and 7th of August 2012. On the downside, the immediate support is 122.80-90 zone, and the only loss of this would weaken the near-term structure and basically keep the single currency against US dollar within this range. Range floors at 122.54 and 124.40 are seen as key short-term supports, and the only loss of these levels would weaken the short-term structure and end this narrow range consolidative phase, and basically would threaten the further easing of the corrective action from 120.42, 24th of July low that peaked at 124.41. Pardon. Larger picture still keeps the bearish tone of the broader downtrend, with the current action seen corrective, as the pair is still struggling to clear the 123.80, 124 level, reinforced by 55 days moving average on the daily chart, with a good signal, I would say, seen on the break above descending trend line from 132.82 through 124.41, with yesterday's close above this level seeing quite supportive for now. But as said, we need to focus the upside levels 123.80, 124.00 in order to see some more action. Narrowing Bollinger Bands are not very promising at this point on the daily chart, with studies still in the negative territory. I would say break above 124, and more important, 124.41 would be a trigger for a stronger corrective action. Otherwise, a risk would remain on the downside, with loss of 123 and 124.40 as the key short-term support to risk further easing. Downside levels, just briefly to mention, 121.33 and 120.42 as a key downside level on the larger time frame outlook. The British pound is set at the beginning, again attempting at the upper boundaries of its short-term, of its medium-term range, with the 157.43 last week's high now coming under pressure. Market is approaching 157.39 seen so far, with quite supportive hourly studies, but already entering overbought territory, seeing risk of possible failure. The break, again, repeated break above 200 days moving average is the supportive factor at this point, but we need to see clearance of 157, 66, 76 medium-term range ceiling in order to resume the this medium-term recovery of 152.67 first of June low, and open 158.00 as a round figure resistance, and 158.47 22nd of May 2012 high. As mentioned at the beginning, hourly studies are entering overbought territory, and this might be a signal for some corrective easing and a delay in attack of towards the upper levels, with the daily structure being more positive at this point, but still a lack of action through 157, 66, 76 would still see the risk of further range trading, although the medium-term price action is aligned towards the upside and sees more focus at the upper levels. We're going to follow the movements of the cable with the focus, of course, on today's releases from UK, with 8:30 public sector net borrowing seen as the key release for the sterling that might affect the current situation with the pair. The dollar yen remains in the corrective action of 79.65, peak of yesterday, with the, as said at the beginning, 79.25 pardon, seen so far, denting initial support at 79.30.40, where it's also Fibonacci 23.6% retracement, and the 20 days exponential moving average with the hourly studies well in the negative territory, seeing a potential, not ruling out the further easing. Ideally, reversal should occur, if and not currently where it is at 79 zone, where we have quite good support levels, 38.2% retracement at 79.08, 55 days moving average, exponential moving average at 78.96, 79.00 is around figure support, and 78.90, 50%, and in any case, in case of any stronger dips, reversal should occur here to prevent pair from a further sliding. As shows on the hourly chart, it seems that the dollar yen is attempting to base at overnight low at 79.25, though the studies are still in negative, and the break above 79.37, where are the 20 and 55 days exponential moving averages, would be the first signal of a stronger recovery. As larger picture structure is still maintaining a bullish tone, our immediate target on the upside is still at 80.00, seen as a round figure and psychological resistance, and as long as 79 zone holds the downside, as said, immediate focus stays towards the 80.00 break, of which to open another very significant resistance at 80.61. Dollar Swiss, as said, is triggered by broader dollar's weakness that is now accelerating losses after breaking below 97 base, as number of stops have been parked just below this level. As we can see, the break below 97 now opens fresh weakness lower, and turns immediate focus lower towards 96.55, double bottom of 6th and 7th of August 2012, breaking below the near-term range floor at 97.00, and turning the near-term action more into the negative territory as a part of the larger downtrend and reversal from 99.70 peak of 24th of July 2007, as a corrective action of the larger uptrend from 89.29 low of end of February 2012 that peaked at 99.70. Trigger, I would say, is seen at 55. That also marks a 61.8% Fibonacci retracement of the latest upleg from 94.61 to 99.70, and the break here is to open way for a further retracement of 89.29 to 99.70, ascent with the levels at 95 approximately seen as the next downside target. Immediate support, as said, is 96.55, then comes 96.00 as another psychological support. And quick look at crude oil that remains well supported and now is rallying through its previous high, 97 round figure resistance has been tested so far. As said, the technicals are quite supportive for the oil price, along with the fundamentals and news that are very supportive at this point, with the crisis in the Middle East and the Persian Gulf keeping the tension high and pushing the oil price towards our next targets, as the oil price is currently attempting through very important 200 days moving average 96.79. There was already brief break higher. That will open way for test of another important psychological critical resistance at $100 per barrel. Hourly studies remain positive, but approaching overbought territory that might be signal for further hesitation around these levels. But overall picture remains well supportive, and I would say while holding above 93 and 92 levels, firm focus remains at the upside. And a quick look at gold that gets again well supported, and basically now is testing 16.24, our initial target, the previous high of 13th of August, breaking briefly below the descending trend line of 16.28, 27th of July high, being well supported for now for a possible attack and the break above this range top and strong barrier at 16.20, 16.40 zone. That will open way for a stronger recovery. Daily structure is positive with fresh momentum now being developed, seeing potential for test of 16.40 on a break above 16.24, 16.28 and 16.33. That also acts as a break point to open weight for test of 1646 200 days moving average. Hourly studies are positive, but currently the RSI is entering the overbought territory. This could be signal of corrective action, as stochastic is already turning towards the downside, with the initial support, dynamic support at 1620, the 20 days moving average, and the static one at 1618, while more significant is trendline support at 1615 and the another static at 1609. Basically only break below 1600 would be risky for the yellow metal, and would keep the upside key barriers at 1620, 1640 zone intact in case of loss of 1600. Otherwise, any dip contained, ideally should be contained around 1610, 15, would be seen as a corrective action of the larger up move from 1590, 15th of July 2012 low. That was all from me, and now it's your turn. Your questions and answers, please submit your questions if we missed anything, or if you have any question, I will be glad to answer. We have Aussie dollar. It seems that the pair is building up a base at 104.09, yesterday's low. This is what we mentioned yesterday. 104 is quite good support, as close to it is 50% retracement and basically bounce of, this is last Friday's low, bounce from here and the recent break above descending trend line of 106.11 and now turns the near-term structure more positive for possible test of, I would say, break point and the important barrier at 105.27 as the pair regains 105.00. Situation on 4-hour chart is promising as the studies are pointing higher, although still in the negative territory, though hourly overextended conditions see risk of pause in the current rally. In corrective action, I would say, so far, with the important support at 104.67 previous high, and the moving averages crossover at 104.60. So 104.60 is seen as a quite good support at this point. This is also around 50% retracement of the latest rally, and ideally any reversal should be ideally contained at this level. Important to say the failure to regain 105.27 might risk a lower top and fresh extension of the 106.11 to 104.09 so far descent, as daily studies are still pointing lower, although the positive structure remains intact as part of the larger uptrend from 95.79 that so far peaked at 106.11. We have another question. How are the supports and resistances determined? It's quite a big question, but I will try to explain to you briefly. Look, for these things, if you want more detailed information, you can enter our website, windsorbrokers.com, and under the educational part, you can find all technical analysis guidelines with all terms described into details. But briefly to say, let's say the simplest one static supports previous low, let's say in this case 104.09 now acts as support. Fibonacci retracement levels are also acting as supports. Moving averages are acting as supports. All resistances depends from which side we are looking. For example, let's say the previous peak at 105.27 that I mentioned is acting as initial static resistance with another 105.72. Let's say trend lines are also seen as supports and resistances. We have seen the break above the trend line resistance here at 104.88. Let's say if we draw another trend line in this point from 101.75, the trend line support is currently at around 104.30. This is the brief explanation. If you want, you can contact me on my email, and I can send you a lot of materials to see how it is. It's more into details rather than talking now online and explaining these things. Also in our website you can find a number of useful information regarding technical analysis. At the starting page, I think there is my email address, so you can send, I can provide you with whatever you request. I can provide you with this, so you can learn more about these things. Any further questions for today's session? No? Okay, then if no questions, we will conclude our today's meeting. Thank you all for attending, and expect to see you again tomorrow morning at Standard Time, 10 o'clock local Cyprus time, 7 o'clock GMT, with the session being recorded and loaded in the YouTube. Windsor's page is called Windsor Brokers Forex. All those that connected later or unable to attend it live, they can view it on YouTube. Wish you a very nice day and successful trading, and expect to see you back tomorrow morning. Good luck.